bring in Dhirendra Kumar, the CEO of Value Research and our in-house mutual fund expert who joins us on the show every week. Dhirendra, always a pleasure to have you on Investor's Guide.
Thank you.
I want to start off, before we do anything else, to talk about the big news that we heard this week within the mutual fund space. We know that Fidelity Investments Worldwide is planning to sell its mutual fund business in India, and that's the Fidelity AMC in India. It's hoping to get about 1,000 crore rupees for it. Prospective buyers are being approached for that Indian asset management arm. Now, I want to ask you, while the sale might take a fairly long time to actually go through, for investors within India who are holding mutual funds from Fidelity, it's going to change their lives in one way or the other, because those assets will then move to another AMC and their fund manager might also change. So, as an investor, is there anything I should be worried about? Should I be looking out for changes within fund management? Should I be on guard? And how long do you think this process is going to take?
This process can go on for a long time. And anyway, mutual fund transactions, the ownership change has a lot of steps to, in the process. And I think it is early days. What Fidelity has gone on record that it is going for a strategic review of its operations, onshore operations in India. And I don't think there is anything to panic, because one, it can happen, it not happen. It's a review. I think it is too premature. Investors should not panic. If you are investing and onto a plan, not to worry. If you act in a haste, there could be short-term capital gains implication. The other is you will be liable for a short exit load if your investment is less than 1 year old.
So this is very important. We need to remember as investors, if you're holding a mutual fund from Fidelity right now, there's no reason to panic. There's no reason to pull your money out, especially if you're going to incur short-term capital gains tax or possibly an exit load as well. Wait for more information and we'll do that for you. We'll track this entire thing for you. And if there is reason for you to worry, we will be the first ones to tell you. So for now, don't worry about your investments. You will hear it from us if there's any cause for concern. As of now, there's nothing to worry about, like Dhirendra was telling us. Let's move on to our regular format show. Let's go straight to our portfolio versus portfolio segment. For a 29-year-old Praveen has written in, he has an annual income of 10.5 lakh rupees. He wants to buy a home in 3 to 5 years. He also wants to secure his family's future. He tells us he's expecting a child in May. Congratulations, Praveen. He tells us he has no insurance right now, which is worrying. He wants to buy infrastructure bonds and he's made a couple of investments, Dhirendra, in mutual funds. The DSP BlackRock Small and Mid Cap, the SBI Magnum Multiplier Plus and Sundaram Select Mid Cap. Now he wants to invest about 20,000 rupees every month. And he wants us to help him with those investments. So I'm going to start at the top with Praveen. You need to first start by getting yourself a term insurance plan, 10 to 12 times your annual income to start with, and then keep increasing that cover. So for now, especially with a child on the way, the first thing you need to do is that term insurance. Now, talking about his mutual funds, Dhirendra, for the next 3 to 5 years, are small and mid-cap funds the best possible option for him, or should he be looking at a more conservative view?
All the three are fairly aggressive funds, and I think 3 to 5 years time frame I would like him to be a little more conservative, and not that it will be a huge compromise on growth, because the time when you need your money back, the market could be out of favor, and this is the set of fund which actually suffers most. So I would like him to approach it with greater stability given his time frame, which is our stable growth portfolio.
A stable growth portfolio is on your screen right now. Like Dhirendra said, this will also help you maintain a simple portfolio, makes it more tax efficient as well. So you're starting off with term insurance and then you're getting the stable growth portfolio. He also has mentioned that he wants to consider building a retirement corpus, Dhirendra. So other than the stable growth portfolio, which is the portfolio he should look at for the next 3 to 5 years to put money down for that house, for his retirement, what would you recommend he do? He does have 20,000 rupees he wants to set aside every month.
No, I think it's very desirable to segregate these goals and have approach them differently. And I would say that our aggressive portfolio, given his age of 29 and he still has 30, 32, 31 years for his retirement, assuming he's retiring at 60. I think one should go with aggressive growth portfolio, and in the aggressive growth portfolio he can actually retain a part of his existing investments, the 3 small and mid cap fund. He can configure this aggressive growth portfolio to substitute those aggressive, small and mid-cap fund by these, which he already has. Because the ones which he has are good funds, not necessarily good for his 5-year, investment time frame. for his down payment for the home.
All right, Praveen, we hope that helps. Right back. If you need any more help from us, it'll be our pleasure to help. Good luck with the new baby on the way, and congratulations. Let's move on now to our hold or sell segment. Chaitanya has written in, he has a goal to accumulate 20 lakh rupees in the next 3 years. He's been investing 17,500 rupees every month for the last 2 years, and he wants us to help him figure out if this is a portfolio that will help him achieve that goal. Now, FT India Balanced Fund is the first in his portfolio. So, Dhirendra, Balanced Fund would possibly be the best way considering he has such a short-term horizon?
Yeah, I think he should have only Balanced Fund, given that, one is the aggressive goal. The other is his time frame of 3 years. And 3 years, one could be in for a surprise. If somebody invested or has been investing over the past 3 years, I think, it's a wake-up call that a 3-year investment, regularly investing over the past 3 years would have been extremely disappointing. So for equity, I think 3 years is not a good enough period. The least you can do is, even if you are, taking chance, at least do it conservatively with a balanced fund.
All right, the DSP BlackRock Balanced is the next on his list. He's investing 5,000 rupees every month in this fund. Continue investing in this one as well?
Yeah, sure. I think, as I said, that given his time frame, a balanced fund is a good way to approach it, and this is also a good balanced fund.
All right, the next one is a thematic sectoral fund, the Reliance Banking Retail Fund. Obviously, a bit of a risk to be taking, especially with a short time horizon. Should he continue investing in this fund, Dhirendra?
No, not at all, because, his time frame, and this is the time frame, when most investors, when they are hurriedly putting together a portfolio and looking at data, they are normally guided by short-term performance. What has done in the recent past is likely to continue, but you end up holding it, and most individual investors, they are now then faced with a dilemma if it actually slips in value, that they wait for the fund to recover the principal and hold on to it.
The Reliance Small Cap is the next on his list. Obviously, you wouldn't suggest that he continue investing in this one either.
This is a reasonable fund, but it is not a compelling fund. And it's a relatively new fund. I don't see any reason why he should be there in the first place.
Reliance Regular Savings Equity is the next on his list. 2,500 rupees every month, Dhirendra. This is not a bad performing fund. This is a good fund. But should he continue investing in it?
I think so. If he's, if he has any gains here, then maybe he should continue investing here. It is, it's a fairly diverse equity fund, has done reasonably okay.
The last on his list is the Canara Robeco Equity Diversified Fund. 3,000 rupees a month being invested in this fund. Continue investing as well?
Yeah, this one too is a good equity fund. It has been part of our, some of our portfolios. It's an impressive fund and, and remains one. Given this time frame of 3 years and, not being left in a lurch, I think it's best to approach his goal with a balanced fund. The selection of good balanced fund you will find in our stable growth portfolio.
All right, Chaitanya, right back to us if you need any more help with your investments.